Hello everyone, my name is Eva and today I will share with you my personal strategy for trading on pocket options. When I first started trading, I found it difficult to achieve consistent success. Sometimes I was able to make money, but I couldn't always keep them, and this feeling was reminiscent playing in casino. It took me 2 long years to realize that I would constantly be in the circle of loss until I made certain changes that I will tell you about in this video. I saw my profits started to grow and I started making money instead of losing it. So every trader who eventually becomes successful and profitable has a similar story. Your story may be a little different, but if you listen carefully to what I'm about, you can take the actions that will improve your trading skills, and no matter where you are in your trading journey. So I ended up missing a trade and watching the market moving in the direction I intended to trade without me. I ended up missing a trade and watching the market movement in the direction so I intended to trade without me. Instead of making a few $1,000s, I was left with zero and felt just like a complete idiot. So I continued to monitor what the market was doing, and soon another potential trade appeared. I'm sure everyone has encountered a similar situation, and that's why I'm recording this video. Today I will teach you how to execute trades correctly using this strategy aimed at a win rate of 99% or even higher. So you will trade like a real robot without missing a single successful trade. For this strategy, you will need regular candles, a time interval from 1 to 5 minutes, and an expiration time of 5 candles. In my case, it is 5 minutes. Follow the rules of money management. So I will bet $300, $600 on each trade. So for this strategy we need only one indicator, it's RSI. We click on it once and go to settings. Leave the period the same and remove the middle white line in the style. We don't need it. We'll leave the values the same. As you might think, we will trade when the price leaves the 70 or 30 zones, entering the overbought or oversold zones. For example, in this case, the price fell into the oversold zone. So I also want to find where our price will be in the overbought zone. For example, here the price is in the oversold zone, and it is logical to open a trade for a fall because the price is in the oversold zone. Also below, the price has entered the oversold zone, and it is wise to open a trade for an increase. Even this deal will be profitable for us. If you look at other trades, for example, there was a bearish trend here because the price entered the overbought zone, and after that we should open a trade to go up. So yes, the deal will close with a profit, but this doesn't confirm our deal. Why? In addition to this point, we need to find divergence. So what is this? I'll make the white line thicker. At this point, we are looking for divergence. So here it is shown that when the price left the zone, it's slightly higher than here. This is our peak, and now we are creating divergence. It is mirrored, so we are looking for an upward movement here in the candles and a downward movement here in the white line. As soon as we notice this divergence, we open a trade in one of the directions. For example, here we saw a divergence, and on this candle we should have opened a downward trade and would have been in a profit. So I'll show you a currency pair where this looks more clear. Let's look at the market. It's very calm because the price remains in the range of 30–70%. The price doesn't enter the overbought and oversold zones, so no matter what currency pair it is now. So yes, there are moments like here when we see divergence. We take the trend line in white and 2 pixels. This point has entered the oversold zone and we see 35%. The next candle is significantly higher. Here we have a bearish indicator at 32 and 35%, and on the chart it is higher, but on our RSI indicator it's lower. As soon as it touches the trend line, we can open a down trade for 1 minute and the trade will be in profit. But in this case we would open a trade and everything seems to be fine, but no, we are in negative territory. Let's start opening our trades. We will also look for divergence and enter a trade based on that to be 100% sure. You are now seeing a weak divergence as this marker is significantly lower than this one, but it is higher on the chart. Therefore, we open a trade for 1 minute for a fall and we bet $600. Let me now show you the trend line in white and 2 pixels. Here you see the divergence. The line goes up and here it goes down. The next entry point would be here, but I opened a trade at the opening of a new candle and our trade is already in profit, so I will get back to you when the deal is closed. As you can see, we have little time left before the deal is closed. The divergence worked very well. The price moved far from our entry point and we have no concerns about this deal. So great guys, we have $510. $510 has been added to our balance. Let's start looking for a new deal for us. I will open 2 trades here for $300 down. What is our divergence at the moment? The price is a little higher on the RSI indicator, but on the candlestick chart itself it is located a little higher. So I decided that we will open bearish trades here for 1 minute, and I will get back to you once the deal is closed. We have a few seconds left before closing the trade, and as we see, our trades are in profit. 2 transactions closed in the positive zone added to our balance. So, plus $552. This is the conclusion of my video, so thank you for watching it and don't forget to like this video. Subscribe to the channel and write in the comments if you have any questions. So thank you, see you soon guys.